This is the Google 1 month overview reading for the month of February 2024. It's currently December 30th, 2023, 11:24 p.m. Eastern Time. Google at the time of this reading is currently $140.93. That's USD. And the shuffle video that we're about to play for you was created on December 5th, 2023 at 3:23 p.m. Eastern Time. That's this video here in the lower left corner. So the overall theme and behavior for Google in February is a decline to and through support to meet another support, and then we rotate sideways along that support. This is support that's relevant on looking at a year-to-date kind of scale chart, and it's crossed with at least one decline that increases with momentum moving forward in time on like a very notable way, either like a really sharp decline or it'll be like a multi-day decline increasing with momentum. Behavior around the high side, we have an important resistance level at the high that's relevant in its importance. It's relevant on like a one-year chart scale or year-to-date chart scale minimum. And usually when you see the Ace of Swords in the high correlated position, it's indicating that that you have the opportunity around that resistance level to trade both directions in the midst of a lot of price swinging or volatility. So in other words, you first trade in one direction and then you trade in the other direction. Which direction first depends on the scenario, but what you can count on is that you're seeing an important high on a multi-day scale, and probably on a year-to-date scale, and you're probably seeing it more than once. And then the overall theme being rotation. So near the low, we should see sideways rotation along a key support level, probably see when you see sideways rotation on a multi-day scale, near a low or near support, you usually see the low more than once in that case. Behavior around the low, this is also significant. There's a cross-reading congruency here. This isn't the first February reading that had a cross-reading congruency in the low position, nor is it the first February reading that had a unicursal hexagram in it. All really important stuff, but the low forms after a decline through multiple support levels on a multi-day scale. At least one low, at least if there's only one lowest low, that's the case. If there's more than one, like if we revisit it because of support, it'll be in that case probably in both regards. Well, either that or the first one of them. Before we go any further, I want to make sure everybody's aware the whole purpose of the channel is not only to help the little guy make some money and level the playing field, but more importantly, to transmute some of the competitive energy of the stock market into goodwill. The more people that we have involved in the channel, following the rule of karma for the channel, the more of an impact we can have on our world together as a team. So the rule of karma is important to follow in every case where we make money utilizing this information. And it goes as follows. 5% of the profits made from this channel's information should be donated forward to one of these charities here on the resources tab of our website, Tarot for Traders. Just click here and donate. It's so easy. It's like 2 clicks. One click here and then another one here to donate. It's so easy, guys. It help cure ALS, or there's all different causes. And then 5% of the profit should be donated back to the channel here at one of these links. If you're international, you can use Wise or you can use YouTube tips. Either way works. And that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you're an angel investor of the channel. The universe is going to send it back to you tenfold for following through on the rule of karma. Blessings to all my angel investors. Let's get back into it. With a 1 month, what's important to understand, if you've never seen a 1 month SO meta reading before, is that these numbers going across, these are the dates of the month. They're labeling each of these cards going across and then again down here, right? These are the trading days of the month. And so what's important to understand is each card represents one date of time, but not each card's energy is going to line up perfectly with 24 hours of time. So you have to give it, in some cases, plus or minus a day of wiggle room here or there. A bad reading, you'll have to do that many, many times. In a good reading, you won't have to do that at all. There's plenty of readings where you don't have to do it at all. But the point is that in cases where you're off plus or minus 1 or 2 days at some point in the reading, make sure to follow the sequence of events as predicted, because the sequence of events as predicted is going to remain accurate even when we're plus or minus a little bit here or there on the timing. On the first, we have a significant move higher followed by a full retracement of that move back down. That'll stand out on a 1 day chart, kind of like a triangular shape, and there'll be a peak there and a trade opportunity that I'll talk about in more detail in the paid version. On the second, we have quite a bit of price change from the high on the first, or maybe we see it again on the second, but there's a lot of price change in the midst of volatility, and we have a trough towards the end of the day. It actually looks like we're kind of sidewaysy volatility, and it's not a trough, it's probably like another peak there at the end of the day. On the fifth, we have a sideways fluctuating rally that precedes a decline. Looks like the decline probably takes place either at the end of the day on the 5th or overnight, because we've got an important trough on the cusp of the 5th, 6th. Sideways rotation on the 6th, and then a big move higher standing out, ending that period of sideways rotation. On the 7th, we have a prominent peak or crest on a 1 month scale, and we decline pretty notably from that peak or crest. That decline is probably one of the bigger declines that we'll see for the month, and we'll come to a trough in the morning of the 8th. Big move to the upside with a breakout on a multi-day scale, followed by a sharp drop around the cusp of the 8th, 9th, and then an unexpected move higher to a prominent peak or crest mid to late in the day on the 9th. I think probably midday on the 9th, and then we have a lower crest a little bit later in the day on the 9th, like at the close on the 9th. Significant move to the downside over the weekend and a U-shaped dip. So likely what happens is we go from a peak on the 9th into a U-shaped dip trough on the 12th, and then we rally back into a peak on like the 13th, where it looks like midday we're bound by a range on a multi-day scale. So we're bound by a range on a multi-day scale there, midday or early in the day, mid to early in the day on the 13th. Come to a trough. Looks like a really sharp drop from that peak on the 13th into a significant trough on the cusp of the 13th, 14th. And then we have a big move higher to another peak or crest midday on the 14th, followed by another significant move down to reach the same trough again, it looks like. And we have on the 15th We successfully turned resistance into new support. So the success card can be a little tricky at times because it doesn't necessarily indicate a move higher and then turning resistance into support. It could, like, the move could have already happened in some cases, like just prior to the success card, in which case you would just turn that resistance into support rather than a big move higher and then do it. But I think here probably what we have is a notable move higher out of a trough on the 15th, and we successfully turned resistance into support on the 16th, where we revisit a support level in a period of sideways rotation that was recently a past opportunity. The support level is not always at a low. Sometimes we're rotating sideways at a high near support, and it's before a sharp drop or something like that. There's cases like that, but I think here is we're probably revisiting the upper end of a range on the 16th at another prominent peak or crest there. Before we go any further, let's take a look at the December reading and see how we did. All right, so we had a lowest low on the 5th, 6th. Looks like we pretty much nailed that. And then we had another one on the 7th. It looks like we were a little late on that, but there was also a prominent peak on the 7th, and we had a big move from the bottom of a range, right? All the way to the top of a range. That's the strength card on the 7th. That's exactly what happened. We went from here, and then overnight and into the day, we came to the upper end of the range, which this was the upper end of the range, right? From the bottom end of the range. And then it gets kind of mixed the following day on the 8th. 14th, I have another prominent peak. It looks like I was off on that. Or I have a highest high there. It looks like I was off on that. But I did have the prominent trough on the 14th and the prominent trough on the 13th. Technically, there's a prominent peak there, too, because we went down and then we came back up. So technically, you could say that this is pretty accurate. It's a little tricky at times. If we got into like a multi-hour kind of chart, it would look a lot clearer, but who has time for that? In any case, on the 15th, this death card here, I either saw this as a lowest low here on the 15th or, oh, here, on the cusp of the 15th, 18th, right? So you could see right here, I was off by a day. It was on, well, technically, I got it. It was the 15th. If you look at the intraday, it was the 14th. If you look at the close of the day, kind of just the body of the candlestick, which a lot of people do, then we nailed it on the 15th. Big move to the upside on the 18th. And look at that gain. We established support, and then boom, big move higher. Prominent peak on the 20th. That came out pretty solid. I mean, this was the highest high thus far, right? On the 7th, we had a highest high. 14th wasn't. That's pretty sloppy, but then we caught the lowest low. Oh, and you know what? I mean, I would have read this as a highest high now. And there you go. The 26th nailed that. The reading's accurate. It's human error. So these were also, I mean, these are like, I've already completed February. This is the last of the February readings. That's so many readings since I've gotten entirely better. Like, that's the thing about SO meta-analysis, is that it evolves over time. The readings, the cards, I gain more depth in what the cards can mean. I see more combinations. I understand signals more and more. And sometimes things change over time to make it better to be able to read. So with that said, not my best reading, not my worst. I'd say this was probably my worst December reading. This was my worst December reading, guys. That's not bad. I mean, if you're wondering, it was created on October 8th. 2023 at 9:37 p.m. Eastern time, right? That's that right there. Boom. So aside from missing where the highest high was, the intraday trading, for the most part, you would have made a significant amount of money. Ace of Cups is a tricky one for trend direction, that's for sure. So if you're wondering what you get in the paid version, everything obviously that you get in the free version, in this public version, but we also talk about the timing of the best trades and what to look for on like a one-day chart or an intraday chart kind of scale, what to look for as far as chart behavior for entry and exit into those trades, what trades to avoid. And then we also talk about trades from the standpoint of like a multi-month standpoint and then even a multi-year standpoint when relevant. We take a look at the cross-reading congruencies to see where February fits into the big picture. Any price level information that we're able to extrapolate, we put in the paid version, and the overall performance of Google versus the S&P 500, all in the paid version. Guys, this information cannot be found anywhere other than our channel prior to the days that it predicts passing. In other words, this is the only place in the world where you can get this information while it's still valuable, before it's the past. Everybody else can give you this information after the dates we're predicting. That's because we spent 23 years developing the system, day after day after day, looking at the S&P 500 by the hour. That was our control, and flipping tarot cards every single hour for years, guys, for years. So that's some of the most valuable information. You can't find it anywhere else, making it even more valuable because there's nobody else who has that information to give them the edge as well. You're the only one with the edge, the only one. So the way that you do that, it's a great way to support the channel. You go to our services, SO Meta Post, scroll down to monthly subscription, click here to order. And in the case here, we're talking about Google. Google is one of the tickers that you can only get through the all paid subscription version, which good news is it gives you access to all of these ticker symbols and crypto as far as a paid version of them. So the trade info for all of them, as well as Google, Amazon, and Nvidia. Really the most popular subscription on the channel. There's a ton of value there. $250 for all the value of content that you get is just insane. It's totally undervalued. But I remember the names of everybody that subscribes to these monthlies because these are the people that help keep the channel running. You know what I mean? Like, everybody counts, but views don't keep the channel running. Views keep the channel growing, but without it running, there's no growth. Right, so those people really are a big part of what goes on here at Tarot for Traders. Thank you to all my supporters. Let's get back into it. A lot of price change on the 20th. There's a significant trough here that we're revisiting probably, and then a big move to a peak on like early in the day on the 21st. It'll be like a prominent move higher, and then a full retracement of that move back down into a trough around the cusp of the 21st, 22nd, and then like one of the bigger moves of the month on the 22nd to the upside to another prominent peak, and then a decline from that peak on the 23rd and through multiple support levels. A peak early in the day on the 26th. Looks like we go higher into midday on the 26th, where we have a important price level on a multi-day scale scale that we poke through momentarily, creating another prominent peak or crest, and then we sell off from that pretty notably through multiple support levels, taking us into a prominent trough early in the day on the 27th. 3 pokes through the same price level, followed by a sharp drop into the trough that we see there on the 27th, and then we do like 3 crisscrosses back and forth from the 27th into the 28th. 3 crisscrosses back and forth through the same price level. The third crosses to the upside, confirming a bullish trend. It might not hold because we have out of a decline on the 29th, a big move from the bottom of a range to the top of a range. Remember, this right here was the strength card. This huge gap up from the bottom of a range to the top of a range was the strength card, right? So remember that there at the end of the month, and it's followed by a sharp decline probably the first day of March. A sneak preview for March is there's a notable rally on a multi-day scale offering opportunity to close long positions and open up short positions, and we'll identify what days really to do that in the March paid version. As far as the highest highs, it's really tough, guys. It's so mixed. It's really tough. If I had to pick any place as a highest high, I would say here on the first off, highest probability, and then I would say here on the 26th, second highest probability. It may be that we're seeing the same high multiple times because we've got that Ace of Swords, and we probably see it at least twice. And then as far as the lows, we have a lowest low here around the 13th, 14th, 15th. We may revisit it around the 20th, but it's like sandwiched between, there's like a ton of price swinging there, and it's kind of sandwiched between highest highs, or really close to highest highs there. And that's Google for February 2024, my friends. If you like this content, please subscribe. Really helps out the channel. Most importantly, make sure to follow that rule of karma. The universe is counting on you to do so. It's the whole purpose of why this information is coming through to you. Make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you guys on the next one. Stay tuned if you got the paid version. All right, so we had this high that we sold off here through multiple supports. And that was from like 2022 down into 2023. That's that indolence, right? There's a notable reversal in 2023, and also high correlation there around the cusp. Like I kind of have it circled off as the 23rd or 2023 or 2024. We have the halting of a bullish trend there in 2024. And as far as the sequence of events as outlined by the 2024 reading, we're kind of blending January and February here, right? The January low is the failure card. We also had failure card as a low significator in December. Yeah, so it may be that we're falling from a higher price level at the end of January, and it gets kind of erratic here. That's that pleasure card. And then the actual opportunity in the midst of the rally to close long positions, to open up short positions, is going to take place in the following month, in March. But we have the appearance of the strength card, which is kind of hidden by the peace card right now. The peace card was the low significator, and it kinetically moved. Probably the low is towards the end of the month. Yeah, I mean, that makes sense. This might be a low here too. It's really tough, guys. It's really, really tough. But this could be a low here as well, like a lowest low as well. It's possible on the 27th. If it's not just a prominent trough, it'll be a lowest low as well. So from the standpoint of that, we've also got this, right? The high correlator card was the Queen of Discs, right here, opportunity. I think there's a lot of opportunity here. When you see the pleasure card, you have opportunity like revisiting a crest that was recently a past opportunity, sometimes also revisiting a trough that was a past opportunity. And I think that's probably what's going on, is we revisit the crest multiple times in February, and then we have a trough that we revisit as well. From the standpoint of like a swing trade into March, I would want to be looking for long positions, and I would open up a long position if I can catch a long position, because it's really price swinging here between highest highs and low, or possible highest highs and lowest lows. I'd say there's like an 80% probability this is a highest high as well, like the same high as over here. It's either the same high or lower high, but there should be a decline from that high to a lowest low, probably revisiting a lowest low price level from around the 8th, 9th. And then we go probably back to a highest high, and then we might go back to a lowest low again. So if you can catch the lowest low in there, I would say open up a partial long. If we revisit it on the 20th, I would add to that long. If we go to a lower price level on the 27th, I would complete that long position there. And then I would look for this Princess of Wands energy in March, which I'll talk about in the March paid version, but that's what I'll be looking for, is this Princess of Wands energy as the exit for these long positions. From like a multi-day swing trade within the month of February, there's quite a few. So there's a highest high on the 1st. You could open up a short position in the midst of a prominent move higher, and then a full retracement. So prominent move higher creating the highest high, a full retracement. It'll be most likely there's an important technical price level there. We have some cross-reading congruencies, like secondary type of cross-reading congruency energies here. So very likely it's a price level that's important on like a 1-year chart scale at the high there. And you could open up a short position there. I'd open up a partial. If I have opportunity on the morning of the 8th or around the 7th, 8th, there should be a decline from a peak around the 7th into a trough around the cusp of the 7th, 8th before a big move, a breakout to the upside to another peak. So if you can catch that trough, I would say close the short there. And then in the midst of revisiting the peak there on the 9th, I would open up a short position again, and I would look to a partial short. I would look to close that partial short on the 14th in the midst of that sharp decline. That's where I would open up a long for multi-day around the 14th. I'd open up a partial on the 14th. I'd open up more if I got another opportunity on the 15th. I'd open more of a long on the 20th if I got another opportunity. And then on the 27th, if I got another opportunity there, I would open up more of a long. You could also close all those accumulated long positions here, most likely on the 26th, most likely. But if you can't, then I would say in March you'll be able to. This is an important trough here, or an important low here, guys, right? It's the low on the January low, right? We also have a death card in there. Interesting. I'm not really seeing any day trades here either. There's a pretty good short here midday on the 26th at a highest high or if it's not a highest high, it'll be a very prominent high, and we'll poke through an important price level on a multi-day scale momentarily. I would open up a short there at near overbought crest before a decline through multiple support levels into a trough on the 27th. If I'm wrong there, I'd probably just exit. If I'm right there, you could also open up a long there to close on the 29th when we reach the upper end of that range. But there's no trade correlation there, meaning that there's probably a higher price level in the near future in March, right? So we see a highest high thus far and a lowest low thus far for Google in around January, February. But I think probably since this Princess of Wands is talking about March, it very well may be that highest high ends up being in March and the lowest low is here. Yeah, hard to say, guys. I think this February highs could be higher price levels than the highs that we already have. We might come down here. Let's see. So it looks like as far as price level for the low, we should come in somewhere around 131, provided there's no like stock splits or stuff like that comes into play. But as far as that goes, the chart would look the same. The numbers would change a little bit as far as value from on their end. The chart would change a little bit. The prediction would really stay the same. It's just whatever the number would be, it would be adjusted accordingly. And then it looks like we go into a highest high thus far in the following month. So that's what I want to be set up for. This peace and this sorrow card are probably going to play pretty strongly in the March reading, I'm guessing, because of that clear kinetics. As far as overall performance compared to the S&P 500 throughout the same period of February 2024, looks like Google outperforms the S&P 500 in February 2024. And that's the paid version of Google. Thank you so much for supporting the channel. Without people like yourself, we wouldn't be able to put out this content. So much appreciation goes out to you. I definitely know who you are. Blessings to you and to all the angel investors. You know where to go. You know what to do. I'll see you guys on the next one.